Hey, Andy, Jamie, what's going on?
Hey Scott, how you doing? Hi Jamie.
Hello, Andy. Hello, Scott. And hello, everyone in attendance.
All right, yeah. Thanks everybody for taking some time out of your day to attend the webinar. Great to have you in here. I see a lot of familiar names, and I see some new names. So I'm looking forward to putting together some good content for you guys today. And I know Jamie will help out when it comes to Holly. So let's dive into the disclaimer, and we will start this baby. All right, guys. Want you to know this is for educational purposes only. Okay, anything you see and hear today should not be construed as investment advice. We're going to be talking about some concepts and some strategies and looking at charts and all that. So it's tempting, but just remember, guys, it's for educational purposes only. If you are looking for investment advice, seek out somebody who is registered in that capacity, like a broker, stockbroker, RIA, or such. All right, guys, before we move on, you regulars bear with us as we tell all the people in here for the first time about our incredible support, education, and training that we have here at Trade Ideas. Um, the software is very powerful, but to some people it can be daunting at times, and it is our job to take that fear from you, because you spend a little time with it, you're going to find it's very intuitive and it's very easy to use, and that's our job, is to convey that and teach you and help you and train you. And we do that by having, first off, the Traders Room with Barry Anderson, and this is a way for you to look at the software. This is free for everyone. You do not have to have a subscription. You can look at the software and look over, listen to Barry, look over his shoulder while he navigates the market and makes calls. There's about 500 plus traders in there, some really good ones. Uh, Best place for a newbie to get into and to get around experienced good traders. And then we have webinars, guys, Monday through Thursday, all in the same time slot as you, as this one as you are attending today at 5 Eastern time. Uh, Myself, Jamie, and Steve Gomez usually pair up and tackle three of those. That would be Monday, Tuesday, and Thursday. And we have a Q&A demo with Dan Merkin, our CEO, and Brad Williams, our CTO. And that's a great place to go and ask questions and learn more about things that may be coming soon. So a great place to go and learn more about the product. And then Friday support session, guys. Starts at 11 a.m. every Friday. It's scheduled for 3 hours. We do run it as long as people are asking questions. Sometimes it may only go 2.5 hours, but like I said, it's scheduled for 3, and we will stay in there as long as the questions keep coming. Very good place, guys. And once again, you can attend this even if you're not a subscriber and learn more about the product. All right. And there's also what we call TI University, guys. This is a curriculum. There's 4 curriculum. We have beginners 101, 201. You can see it goes all the way to 401. They start out on Monday, they end on Thursday, just like our webinars, except these are at 12 Eastern. Okay, if you cannot make it during that time, we do have these recorded on our playlist on our YouTube channel. So, but if you can get in there, there's a Q&A after each one of these. You want to get in there and check it out. We tell everybody, if you take the time, go through these classes, and then come to our Q&A by the end of 1 week, you're going to have a really good grasp of the software. All right, let's look at Brokerage Plus. All right, you guys been hearing a lot of this over the last couple of years. Well, it came out of beta the end of last year and is going strong. A lot of people are starting to use this. We are very excited about it, and it's getting better each day. If you want to find out more about Brokerage Plus, just go to trade-ideas.com/beta. All right, here is the agenda for today, guys. We're going to do the market recap, talk a little bit about the market, what happened today, maybe what has happened over the last few weeks. Then Jamie's going to take over and he's going to discuss Holly recap, go over some trades. There was a couple of good trades and risk on today. So he will take a look at that. He's always good about breaking down those trades for us. And then one of the guys here has sent me an email wanting to learn, more about maybe finding stocks using our software for investment ideas. And so I thought that'd be a great subject matter. We're always talking about trading and day trading and even swing trading, but what about longer term, much longer term in trading? Or investing, I should say, because there's a difference there. And we'll talk about this. I'm going to show you how you can build scanners to help find opportunity. We're going to talk about stocks like this and score and my like symbols, how you can use all those features to kind of help you find potentially good investments. All right, so let's back out of this for now, and we will jump into the market recap. All right. And here we sit. Today we had a little scare. You can see the little dive down there in the market, got close to the 10-period moving average, and what happened? The buyers came in, propped it back up. No harm, no foul, did not close. We haven't closed below this 10-period moving average now in it looks like about a month almost. So, once we say this over and over, there's no really bearish case, and we will continue to say that as long as we get this kind of price action. It's frustrating when you have these markets where a good portion of each day doesn't do anything, and just we have one really nice green candle over the last month, but hey, it's the market we have. Someone once said, it's an ugly baby, but it's our baby. I think it was a coach or something. But anyway, let's take a look around. The Qs are kind of still leading the ways, guys. You had Facebook came out with earnings. Not real impressive candle today, but nonetheless moving higher. It is on all-time highs. All you have to do is look at my single stock window over here. Position in lifetime range, position in year range, position. When you see everything moved over far to the right like that, that means that's good if you're bullish, that's for sure. So we're just creeping higher. I honestly, I wasn't expecting if once we take out highs it to be just roaring. We haven't seen that in, gosh, 10 or 11 years. I mean, it's just been one of those grind high markets. I can't remember, Jamie, the last time I've seen what's considered to be, just euphoric buying. It's just, I don't know. It's just mundane, creeping higher, pushing, shrugging, along.
Yeah, I don't think any euphoria would kick in until we pop new highs,
Well, no, that's what I was just saying. The cues are there, but
I know, but it doesn't really feel like we're there if the SPY's not there. I mean, come on.
True.
But it's definitely a good leading, and what you could call a potential leading indicator with the no bear case being present on that SPY daily. And I think we all know what's coming, but nobody wants to go out on a limb and go, oh, well, this is going to certainly happen.
We know there's no certains, that's for sure.
Right before the webinar, I was just, scrolling my Twitter FinTwit feed and saw a post from JC, and he's just laying it out. He's like, what's going to happen? Is there going to be a huge supply up here? Nobody knows, Hey, it's exciting. Hey, is it tomorrow? Is it the next day? Is it the next trading session? What day is it going to be where we do crack that high? But I don't think it's too far from now. We go test it at least.
Well, we can kind of look back over here possibly for a clue of what kind of transpired here, once we broke out of this. And we did have a few days of run, but yeah, I wouldn't know if I'd call that euphoric, but nonetheless, guys, it's price action, price pays, and we are getting close to an all-time highs. We showed the cues. The cues are there. The spiders are really close. There's just a sliver of space there. IWM, let's take a look to see, and it's still just kind of going sideways, not really participating. Long ways away from its, there was a while back, these guys were leading the charge, but not anymore. Now, is there a chance these guys can take off if they get above this level? I think, yeah, there's a real good chance. I think Steve talked about this the other day in his webinar. We could have a magnetic pull up this way if we do get this area, but we'll erase that. Down, there we go. So Diamonds probably had a little bit of a pullback today. Yes, they did, because of 3M, I would suspect. 3M had a kind of an ugly day. There may have been another one too, I don't know, but that was a really ugly day in 3M, a Dow component. But Facebook and some of the others, Amazon came out. Looks like they're kind of trading pretty much flat, aren't they, Jamie? Yeah, not a whole lot going on. That's rare that you see Amazon after earnings.
Yeah, you got
Pretty
that
much
big
trading
wick,
right where it closed.
big wick up and then right back down again.
Yeah, you don't see that much. Yeah. All right, Jamie, do you have anything to add to the overall market analysis?
I mean, we're all pretty much on the same
Yeah.
wave there, my friend, on all that
Oh, yeah.
stuff. So
I
if
would
you're
still
ready,
keep an eye out for the IWM in case it can't get going and it starts to roll over. It will, I think, pull the other ones down. But that's about all I have, Jamie. Not a bad day for Holly. I mean, there was a couple of good trades in there. I mean, definitely not one to write home about, but not a bad day.
this is true. And sometimes on a green day, there'll be a little bit of risk on, and there could be a whole lot. And today, for the performance that the trio put in, I mean, we cranked out 33 total trades between the three of them.
Yeah.
And we're up a little bit,
about $1.20 or something.
Yeah, $1.20, $1.30, somewhere in there. Yeah. Which that's a lot of trades to get to that level. A lot of trading to pay for. But man, looking at some of these risk on today, like, well, I tell you what, let me go ahead and grab it, and we'll just
grab it and
we'll take a peek here.
All right, I got it. And lost it.
Perfecto.
Got it back.
Should be back. Okay.
It is.
I just had to get rid of all my unicorn wallpaper and stuff.
That's what it was.
Okay. So let's start down here. Once again, just at the bottom here, Neo 2.0 in the middle, and Holy Grail at the top. So the glaring example of risk on today, AAN, Aaron's, I'm assuming, is that the, yeah, the errands that are everywhere where you can go rent stuff. Just curious about the company there. But man, look at the difference here. Look at the spread between risk off, where Holly booked her 25-cent profit, versus where the thing finished today. 236 over a 2-point spread in there, and a pretty stable call here when we look at Holly's entry price here. Just a nice slow grind up, not really a whole lot of pain to endure. Even better, we got the 10 period. There's the 10 period right there. Things just hugging it like a glove. In addition to that, what do we have here since the signal occurred and we participated? I mean, just nothing but upward momentum. And typically when that's happening, Holly, why did she exit? Profit save. Guess it wasn't moving up quite fast enough for Holly. So she called that audible, profit save, booked her 25 cents. This one's really nice because we could have used, if we chose to stay in, whether a half lot or the full lot, using a break-even stop would have easily kept us in this trade all day. And it was just a nice slow grind up. After it put in this first little high here, went sideways for a little bit, kind of threw a nice little, one more little signal in there. You kind of want to, if you wanted to bolster that position, you felt good, you were feeling the flow, it's hugging the 10 period, you know when a trade is working nicely and when it's strong versus one that's pulling back to flat, or you're up a quarter, when you're up in nickel. So, you know, being in the flow and feeling how that price moves is another thing that you can kind of fold in over time. And this one certainly adhered to all those characteristics. Just a beautiful trade all in all, and rewarded with the risk on, even if you use the break even. You know, here over the past couple of days, the break even wasn't getting it done. What does that tell us? On days like that, you're having to take a little bit more risk if you want to stay in them. This one, you did not have to do that. Could have easily stayed in with that break-even stop loss. So just a gorgeous trade from AAAN on many fronts. Not only the statistical probability that got us in, but this second little setup right here, all being strong all day and hugging that 10 period. AAA trade right there, Andy. Interesting here, you guys, which is an ETF. Velocity shares 3x long. So a lot of people don't like ETFs. I tend to weed them out of all my manual scans. But hey, if the statistical model identifies one and it goes up, great. If I could develop a strategy that only involved ETFs, hey, if it worked, why not? If it moves like a stock, then let's give it a shot. I really like the signal on this one as well for a couple of different reasons. You know, here's that opening candle. We go down here and put this little base and this wick in. Then not too long after that, about an hour, Holly calls that signal. I really like it, number one, because we had good statistical probability. I really also like it because this opening range, this orb had just occurred as well, and just not too far after it, okay? Not a lot of energy expenditure there. That's a great price for the range break in and of itself, right? So just folding in a little additional chart pattern on top of Holly's signal, just once again, love these things, right? So look what we had happen, just boom, off to the races once again. Not that bad of an exit on the first little pullback there, but of course we get that move higher. What else are we noticing here? Ever since the signal of Holly, this thing has stayed well above that 10 period SMA, which is always a good thing when we're long and this thing is in motion. Could have stuck on if we decided to go risk on here, the beautiful thing with this trade as well is that break even stop loss today would have kept you in. So you could have peeled out of Holly for half, or with Holly, I should say, kept that second lot, used that break even stop, and you got rewarded with not that much risk on both UGAs and AA in there. So those are the two juicier ones. I mean, we got a 7 and 8 center here, but let's move on to a couple of the other modules here. That's a pretty good spread there on this NCI here, 4 cents. And the interesting thing on this one is it wasn't a profit save. It just meandered slowly throughout the day. And keep in mind, these are 15-minute candles here, so that's a good 1, 2, 3, 4, 5, 6. That's a good hour and a half in there. Okay, trade timed out. Once again, what are these beautiful characteristics that are showing up again and again on these trades? That 10 period is in play yet once again. You know, if it weren't for that wide range bar there on the open, we could have got another good signal, but it was a little out of whack. That didn't occur till way over here. So not really, you know, for playing by the rules here and including that wick, not any real clear-cut opportunity to leverage the position, but not that risky of a trade. Look, once again, Holly pulls the plug on it right here. Half and half would have worked again with a break-even stop loss, yet once again, on another Holly risk-on trade there. Pretty juicy one here too, TAL.
Nice.
Just a solid entry, a little sideways movement. Hey, look, it's our friend, the 10 period, showing up yet once again. Just some really good risk on trades. And so kind of circling back around to my comments earlier, not the best on the point total, but if you get proficient at identifying trades like this, where you do get that risk on reward, and it's not every day, but it just seemed to be working a lot today, then, you know, risk on here, 42 cents, risk on 87, but then we had a nice little stack of losers as well. So, folding in some auxiliary chart reading patterns on top of these, that's where we can really add to these positions and really leverage them. So this one, once Holly got into it and went sideways here, it's kind of hard to see that opening wick there, but we did have a secondary pattern that could have been played on this one as well. When do you add to your winners? And if you're new, old to the business, what do they always say? Add to your winners, cut your losers when you're supposed to add to your winners. Well, adding to your winners, not exactly the most clear-cut methodology. I mean, you can apply many different techniques to that, but I feel that these are just some of the simpler ones that you can tack on top of the AI signals, and it's just chair time, and you start identifying these additional opportunities and correlated patterns along with the statistical probability, if that makes any sense whatsoever, Andy.
Yeah, no, makes sense.
All right, so we got to at least take one from the old gray mare here. Timed exit on this SEDG, so she gets 7 cents, but hey, another 23 cents on the table. This pattern a little bit different than those that we just looked at, where we're getting this little bullish pullback right here. But once again, what do we have in play here? The old 10 period showing up yet once again. So not a bad call here, a little sideways action. Makes it through the whole timed exit. And then once again, what do we notice here? Break even stop loss, whether it was the second lot or the full lot here, would have kept you in this one for a little bit of that risk on money. And that's about it from Holly on risk on, risk off spreads.
All right, good job, Jamie. Appreciate that. And
Sure.
yeah, if you want to just pass it over, okay. All right, let me grab it here. All right, guys. So yeah, one of our fine customers who's in the webinar today sent me a email, wanted me to help him with some ideas as far as maybe investing in his 401k. And I was kind of putting something together, and I thought about it this morning while I was working, and I said, well, this will be good content. I can share this with everybody. We're always talking about trading and short-term trading. Why don't we just go over some ideas about investing? Now, a little warning. I mean, it's not my forte. I'm more of a trader. 17 years of successful day trading, and also doing some swing trading during that time. So those are probably my two favorite time frames. Investing is kind of boring, but it's everybody needs to do it, and everybody has some rules when it comes to investing, just like they do with trading. I know a lot of people that isn't the case. They just put their money in a mutual fund, let that mutual fund spread the money around, and that's it. Well, as long as everything's fine and dandy, the market's moving higher like it's been doing over the last 10 years, it's fine. Everybody's happy. But everybody tends to get complacent too. And let me tell you, after suffering through 2 bear markets, I mean, it can be painful. Not only for trading, it can be painful. Actually, it'd be better for trading, but it can be painful, to watch maybe your savings, your 401k, SEP, whatever you might have, lose 45 to 50% of its value. And it can happen. I saw it happen to a lot of people in 2008 and 9. So you have to apply some rules, and we're going to go over some of the just some real quickly of, it's a different animal. Investing's a little different animal than trading. Okay, timing is not as important like it is in trading. Okay, the entry is so important when it comes in short-term trading, whether you be day trading or swing trading. The entry is vital. Not so much with investing, okay? But you still need to maintain your risk management in investing the same as you would do in trading. And what I mean by that is you have to use stops. Okay, a lot of people say, well, I'm just buying this for the long term. I don't need to use stops. That's not what you want to do, because getting back to my scenario, a stock, a portfolio can go, lose 50 or 60% of its value. Really, I mean, it's happened. And especially if you're in, some volatile, high beta stocks. Some other things I want to point out, the stops can be much more liberal though. Okay, you don't have to have these tight stops when you're trading versus when you're investing. Let's just use this SC DG, where as a matter of fact, when Jamie was talking about it, I pulled it up, kind of nice looking bottoming pattern, kind of cupping right here. Maybe this could be a possible investment if you guys believe in solars. And it's coming up, hitting a multi-month high, looks like about a 7-8 month high. Well, if you were day or swing trading this, you might want to put an alert, a stop down here below this level right here. Okay. Well, you don't have to be so tight when it comes to investing. Okay, if you're investing in this one and you're looking at the long term, okay, you may be looking for this thing to go, back up to 60 or even maybe at all-time highs in an investment. So you can be much more liberal. As a matter of fact, this swing exit that's down here, I would not have it here. This would probably be right here at the worst case scenario for a swing. But that would be a nice little investment. Okay, these swing exit are for like really long-term swings, I think, because this would be way too risky for a swing trade for me. It'd probably be to this line or that line. But when you're investing, you can do this, okay, because it's risk reward. Okay, you're looking for a much greater reward in an investment, so your stops can be much more liberal. All right. So I don't want to get all into investing, because I'm sure you guys have done your own homework, but I want to tell you, because it's a misconception that people can just buy and hold and just forget about it, and that's the excuse they look when things turn and go against them, when their investment doesn't work out. Technically, they said, oh, that's it's okay, I'm buying this for the long term. I can't tell you how many times I've heard that. It's not what you want to do. Okay, just like a trade, when it doesn't do what you anticipate it to do and goes against you, you have to get out. Well, at a certain level, but definitely need to plan for a stop, even if it's a investment. All right, so other than that, oh, and by the way, don't be afraid to swing trade in your long-term 401k or whatever. If it's self-directed and you have the ability to do that, and you buy your own stocks in there, I'm telling you, I done much better swing trading my SEP and my 401k than I have investing. Okay, it goes back to a theory, I mean, that where Steve and I created this swing scalping, where we look for setups. A lot of times we do it when we're looking at the TOW, and we look for that 3-day move. And if we can get a nice 10%, 15% move in 3 days, bang, we're out. And not only that, you're freeing up money to look for the next trade. You don't have to sit there and suffer through, the pullbacks when they come. Okay, you're sticking and moving, and I don't think there's anything wrong with doing short-term trading in your investment account. I know a lot of people do not have time to do that, and that's fine. But if you are a trader, I think it's great, because I can tell you right now, Steve and I did it when we had our Ditto trade account, and my personal account, I well outperformed the S&P by actively trading my 401k, not day trading, but actively swing trading it. All right, so how can you find these ideas? Well, let me show you something. Let's look at some quality stocks here. Okay, let's take a look at Facebook. And first off, I do not like, some people like buying highs. They like to buy high and then sell higher. That, when it comes to investing, that's not what I'm doing. I will sit on my hands forever and be patient and wait for a stock before I am buying stocks way up here, like in Facebook, at this level. But I know it's a quality stock, and I think this is where score, you can use our stock composite rating to really help you um, in finding this opportunity, and I'm going to show you how to do that here in a minute. But I know that Facebook over here was a score of 100 on this day right here. Okay, had bad earnings, got clobbered, fell from grace. Okay, trust me, a lot of people were at this time were saying, "Oh man, Facebook, you know, if it was up 216, man, now it's fallen all the way down to 176. This is a big, great buy right here." But look what you suffered through if you're doing that. I mean, it dropped, from 170 down here almost to 120. That's brutal. So I don't think it's it's wise if a quality stock falls from grace to just rush out and buy it, just because it's a good quality stock, and you're going to anticipate that at some day it's going to be back to all-time highs, and it very well could be. But this is where I think you can use your trader technical skills to get better entries. A lot of people don't believe in timing the market when it comes to investing, and I think that can be very unwise, because you can get much better prices and outperform those that just invest no matter where the market is or where the stock is. So here's what I'm going to suggest. Okay, I'm going to take a look at two stocks here that fell from grace and look what happened. Okay, and see if we can find a technical point that signaled a buy signal. Well, we fell well below the 10, 20, 50, 200. Okay, bounced up real quick. This is too probably early for me anyway. I mean, if you did try it on this day right here, I would have gotten out as soon as it failed, because you're looking for it to continue in the same direction once you do make a buy here. But this is why I think it's important to have maybe a major moving average. Okay, and in this case, let's look to see which moving average it is. Okay, look right here, it fell below the 200. Okay, back and forth. Okay, this is where I think these short-term signals, guys, you gotta, when it comes to investing, I would ignore those. Okay, these are for smaller time frames when it comes to like scalping or whatever you're doing. Look how much it's gone back and forth over its 10 and 20 through this whole down move. But look what happens here. It butts up against this 50 several times, and then look what happened. You have a gap right here above that 50. It's never looked back. Okay, let's take a look at Apple. Same thing, kind of fell from grace from this moment right here. Boom, below the 50. It kind of was really kind of ugly right here. Fell from grace, gap down, and then right here, a gap above the 50, and then never look back. Now, I'm not saying this is going to happen every time. It's not. But if I had to pick if I'm looking to invest, now, if you're scaling in, that's one thing. Okay, if you're scaling in and you're like it's pulling back and you're buying just small chunks, maybe quarter chunks, I can understand that. I still think this method is better, to wait for the reversal, because I can promise you those chunks, if you're trying to keep buying, they're gonna come way too quick, and you're gonna be underwater. So right here, you have a nice little technical indicator to use as and you may choose something else. It may be a 200, but I think you should pick something, have a reason for getting into a stock. So if you're looking for quality stocks, and we all know Apple's quality stock, Facebook, they do have their moments where they fall from grace, and a lot of times, guys, it's going to be with the market. Okay, the market was kind of ugly during this whole period, and once again, even though I don't think this lined up with, I know it didn't line up with Facebook. Let me see if it lined up with Apple's. No, this popped above the 50 before Apple's move. All right, so how can we use our scanner to kind of help us find this? Well, let's take a look at a fine tool that we have that's called Stocks Like This. And I've already gone ahead and put this together, guys. So if you guys just go and Google Stocks Like This, you'll find it, okay? We have it on our website too, but just Google stocks like this and you'll see it, trade ideas. And what you do is you put in the symbol, and I looked at the day that Apple cleared this 50-day, and it was on January 30th. So I put in January 30th, and I started it late in the afternoon because I wanted to make sure it had cleared that 50-period moving average, because obviously we could see it closed above it, but I wasn't sure intraday when it exactly cleared it. Put in a duration of 15 minutes. I hit submit, and it gave us every alert and filtered that was satisfied during that period. And I am not interested in anything except things that will help me build a scanner. Okay, I don't care about 10 periods, all these alerts here mean nothing to me, but I do want to see where it is, you know, in its position and range, because if I have positions in range, I can kind of build a scanner that will help me find stocks similar to the, you know, to the Apple when it occurs. All right, so I went down here, and let me just pull up the ones that I'm mattered here. Hold on just a minute. I'm going to go into this scanner and take a look at it, roll the configuration, so I can, because I built something. All right, position in year range. Okay, I'm looking for, obviously, I'm looking for a pullback, so I wanted to see where Apple was in its position in its year range. So let's go into position in year range. You can see here it was right around 25. So it's in the lower 25% of its yearly range. That's good. Looking for opportunity. Position in 20-day range. I want stocks that are kind of moving higher and not coming into their, in other words, I'm looking for a turnaround. I'm not looking for stocks pulling back to their 50. I'm looking through at, I'm going through the 50 or already have gone through the 50. So what I want to do is put a position in 20-day range. I think I use 75 minimum, 75%. So it's going to be in the upper quadrant of its 20-day range. And then also change from 50, obviously. Okay, we're using that 50 because, so I want to see the stock above the 50. So all I would do is, let me just pull this over, and you'll see what I'm doing here. I'm using, let me, position in year range, a max of 50, position in 20-day range, a minimum of 75, and there's my change from the close is up, and where is my 50? There it is. All right, change from 50, I put in here, I need it above, so 0.01 in the minimum, and the max, I put 4% because when I first ran this, I did not have a max on the 50-day moving average, and I was getting things kind of well above, kind of missed the boat, you know. And you can play around with this when I show it to you and put different values in here. I think it'd be wise to do. So those are the key things I wanted. I didn't care about all this other stuff, you know, pivots, resistance. I just wanted to see things that fit Apple's technical look there that I just showed you in the chart. All right, so let's go in here, see what else I used in here. EPS, that just eliminates any ETFs. Minimum price 5. I'm looking for thick, you know, if I'm investing, I want thick stocks that do at least 500,000 shares a day, not this 100,000. They're too thin. They can fall apart on you quick. So that's about it. So let's take a look and see, and I haven't even named this yet, but anyway, let's go back to in history. And what I'm doing, guys, for those of you looking at this for the first time, I am going to go back to a time frame, historical date, and I'm going to put this on 2/42. That's late in the afternoon Central Time, right before the close, and I'm going to put this date on January 30th. And look at there. There we have Apple on that date, right there, letting us know. Now, there's going to be some, obviously, some things in here that didn't work. And what I'm going to recommend to you guys, and I'm going to do that here in a minute, but I'm going to, first of all, I want to show you some, you know, there's Google in there as well, did it on the same day. Now, when I look at Google, it also did it probably back on this day right here, which is January 4th. I can't go back that far to confirm it, but looking at all this, I am pretty certain that you would have caught Google, you know, on this day right here. There's a pretty good one right there, HP. There's another pretty decent one. So, but here's the problem. I was looking through this, guys, and what I did, and this is, I put a score filter in this because, and I put a minimum. If I go back into the configuration, I'll show you here. I put a minimum score of 65 because I know, because I created this score, this score rating, this composite rating, along with Michael. I kind of have an idea that if a stock is in the lower, you know, portion of its 50-year range, okay, and maybe below the 200 moving average, it's going to take a hit. In other words, you're not going to find any score like Apple was on this day in the upper 90s or 80s, because technically it is, now fundamentally it's still sound. It's still meeting all the fundamental characteristics, okay? It's getting all those points that are designed for the fundamental side, which is about 4 or 5 metrics. But technically, okay, it has fallen from grace and it's in the lower, you know, let me just pull it up real quick. So even though it's popping above its 50, still well below its 200, well, you know, well below its you know, yearly range, lifetime range. So there's a lot of points I know in here it's not getting. So, but I know if it has a score, and let's see what Apple had on that day, of 73, I know that that's a good score. And this is what you guys probably need to start trying to figure out. I mean, that if a stock is well off its 52-week high in the lower 25% and it still has a decent score of 73, it probably tells you that fundamentally it's pretty sound. But that's not the way we designed it, okay? We're not going to give a stock that's falling from grace like this and just keep and maintain a 95 score on it. That's not the way we work. We want to alert you when things fall apart and they're going to lose their score, and so to help you, to keep you out maybe of getting in these things too early. All right, so here's what I'm going to suggest. I mean, we can look through some of these. I saw a lot of oil stocks in here that just really didn't work. Oil is tough. There's another agriculture, MRO. I mean, it's still technically okay, but a lot of oil stocks were in here, and I just kind of avoid them. So this is what I'm going to suggest you do, guys. Okay, right now I have this just set up to symbol list, no symbol list. It's just following all the major exchanges. Okay, so you're going to get a lot of data in here on some days, especially when the market is pulling back, like on this day right here. Okay. If I go to today time frame, you're going to see far less. Let's take a look, see what we have in here right now. Not bad. You have a stock that's peeking its head above, right at its 50-period moving average. This one, it's in the upper portion of its 20. It is pulling back, but you know, not bad. Not bad. It has potential. Here's one that's kind of digging itself out of a grave. You know, it looks a lot like this Let's Go Fishing, which is another one I would highly recommend, guys, when you're doing your looking for stocks for maybe investing. But what I would do, guys, with this, instead of looking at all 80,000 stocks, or 8,000 stocks in the 4 major exchanges, build yourself a symbol list. And the way you can do that is you can take this composite rating, and now would be a good time to do this. I'm not going to do this for you. I'm going to give you like a little homework, but here's what I'm probably going to do. Okay, so this is composite rating above 90. So what I might do is just go ahead and got a lot of stocks in here. So I'm going to change the set record count to 200. Okay. Now we got them all, everything above 90s in here. Okay, and you could even go, you know, if you wanted to, it may not be a bad idea to even go around to around 80. And the way you do that is go to filters, Composite rating, just go ahead and put in 80. All right, now we got a lot more. So what I could do, okay, these are stocks that are very sound technically and fundamentally. They're near all-time highs. You're looking at position in year range. Look at these lifetime in range. These are strong stocks, okay? So what you might want to do is use our, copy these symbols, build yourself a watch list. Okay, I'm not. You can do that and Control C, cut and paste into a Word doc or whatever, and then make you a symbol list. Make you a symbol list with all the strong stocks that right now, while the market's close to highs. And then what you can do is you can take it and drop it into a, into this thing that I'm going to share with you. This little one that I just built, and I'm going to share with you after I name it. Let me just go ahead and name it. And we'll call it, let's call it possible investments. All right, so I'm going to go ahead and share this with you right now. Drop it into the chat. Let's call it PI, possible investments. And going to drop it in there. Now, what I'm going to recommend you do, guys, is doing what I'm showing you. Take this composite rating, okay? If you do not have it, I'll go ahead and share this with you too. And go ahead and copy all these symbols and paste them. There you go, Waleed. And you can put them in my liked as well. My like symbols. What Waleed's talking about, and this is what I'm glad you reminded me. You can click on these, like this VSAT right here, and just go ahead and heart it. Okay, so every time you see something on, this is the method you can use, this one right here, you can heart it, and you can do that method. Just go through and heart these things, and then you can point this to my like symbols. That will work too. Either way, whatever. Off the bat, this may be the easiest because we are close to all-time highs. You might want to go ahead and grab all these strong stocks that are in here right now. But Waleed's right, you can build your my like symbols as well and add them to the one, that symbol list I just dropped in there. But that's a way. And just remember, guys, this is something, remember, you're not trading, so this is something where you need to be patient. You need to be patient and look for the the ones that you like. And you may only want to watch a list of 20 or 30. Don't feel like you have to grab all these. You may just have your favorites and you want to keep an eye on them. Drop them in there, and when you see that setup happening, man, and it's an investment, that's where that's going to probably be a good opportunity to reach out and maybe at least buy a portion of your position. But once again, guys, when you do that, you always have to, let's take the example for Apple. Excuse me, I can drink water. All right, so let's say you do go out and buy Apple on this day right here when it breaks above that 50. Great little gap and go there, beautiful. What you want to do is define your stop. Okay, maybe a good place would be all time, back to this multi-year low, or yeah, it's several, yeah, it's a multi-year low right there. So that's where you want to draw, define your out. And once again, you need to do that with investments just like you do with trading, okay? Because, the market goes to crap, the last thing you want to do is be deer in the headlights, and several months later, you're looking at your 401k and you just lost 40%. Yeah, trailing stops, that's more for trading, Waleed. You can, what Waleed's saying, I understand what you're saying, Waleed, but once again, you don't want to, in an investment, as a matter of fact, my brother called me up on this day and said, man, do you think Apple? I said, man, I think it's a great buy right there. You're looking at an investment and you need to let the investment work for you. I mean, that doesn't mean let this turn into a loser, but you got to keep in mind what you're doing. Yeah, you're investing, you're not trading. Now, that doesn't mean you can't have a nice profit and take half off, Yeah, you can do that for sure, or take a portion off, put it away. But you want investments to work for you over time. But all right, Jamie, does anybody have any questions? And like I said, I am not, investing is not my specialty, but I have learned a few things over the years. So you're welcome, Waleed. You're welcome. And
good insight there, Andy. I enjoyed that as well.
oh, good. I'm glad you did. If anybody has any questions, you're welcome, Christopher. You're welcome. But it's nice to have a little tool, not only, and once again, check out the Let's Go Fishing. That's going to be a good one at all as well. So, but what I like about this one is you can assure, like the stuff coming through Let's Go Fishing, this could be some kind of skeptical stuff coming through here. We don't know that these at one time traded at all-time highs and had a really high score. Using this example, I think you can really put some quality stocks in there and find and look for that opportunity. All right. You're welcome, John. You're welcome, Mike C. Thanks, everybody. We've only got a few minutes left. I think I'm going to bring Scott in and let him walk us out. You guys hang on. He will have a discount code for you.
That's right. A couple announcements on the way. We have a test drive coming up soon. It's coming up May 6th. So reserve your pass. Go to trade-ideas.com/test drive. And for $8.99, you get to try everything that Trade Ideas offers, including the AI and Brokerage Plus and all that stuff for 5 full trading days. Tell your friends. And don't miss out. We also have an ebook, very timely this year, How to Win in a Post-BTFD Market. It's got 5 strategies. Both Andy and Jamie contributed chapters. Just go to trade-ideas.com/ebook, put in your email address to get the download link delivered. And we got a podcast, might have a new episode up tomorrow, so stay tuned for that. But to be ready for it, make sure you search for Trade Ideas Podcasts wherever you listen to your podcasts and subscribe, then you can catch them all. We have a discount code that's good for the rest of this month, Holly Bunny, all caps, save 15% off the first month or year of any subscription or upgrade, so make use of it. Any questions, email info@trade-ideas.com. You can follow Jamie on Twitter at QuantBot. Steve Gomez is at Today Trader. We also have @TradeIdeas. Facebook.com/TradeIdeasPro is the Facebook page to like and share the stuff we post with your buddies. Thanks, Andy. Thank you, Jamie. Thank you, everyone that attended, and have a good one.